So we saw very good returns in the December quarter across all the options, particularly in Australian shares, international shares, high growth and MySuper. Double-digit returns in Australian international shares, high single-digit returns in high growth and MySuper. However, we would caution just looking at quarter returns as they can vary, but the very strong December quarter enabled most of the options to have a very good year. In terms of the investment strategy, despite the very good returns in the last quarter, there's been no major changes in the investment strategy. Obviously, we're all set up for diversified portfolios, and in previous quarterlies we talked about having a value and small cap to mid cap bias across our share portfolios, which did very well post the vaccine announcements and the new US presidency, but as of yet we haven't really changed any of our strategies. This quarter, we had very strong returns, double-digit returns in Australian shares and international shares. That's not surprising given the unexpected good news on the vaccine rollout in October and November, plus the new US President Biden presidency that has come out, and also the Democrats now having control of both houses. Now, as we see with these things, share prices can go up and down. So we saw very weak returns back in March and very strong returns at the end of the year. And we always caution not to look at the short term, but to ride it out over the medium to long term. But really strong returns last quarter helped our members record good returns across all the options that have shares in them. Pleasingly, the Australian economy is doing much better than we feared when the coronavirus came out back in February and March last year. And one of the reasons the Australian economy is doing better than expected was a number of things. First of all, we seem to be on top of the coronavirus outbreak via the lockdowns, the borders and the international borders. But also we had strong fiscal stimulus by the federal government and state governments and very low interest rates by the Reserve Bank of Australia. And so through packages like JobSeeker and JobKeeper and low interest rates, we've been able to keep the economy going. Now, obviously these will be turned off in time, and what we'll see is it'll pass from the government sector to the private sector, but we hope the packages are still kept in place because, as we know, the rest of the world is still suffering from the northern winter corona outbreak. There's obviously new mutations and the vaccine rollout's taking a bit longer than expected, but Australia's well placed to handle a lot of these issues. We saw a little bit of switching in early 2020 as the coronavirus hit, and we've seen some of that switching go back into the market. But again, this is a key part of superannuation. Those who are young enough and who are employed, superannuation's a long-term game. So the idea of timing the market's very difficult. And again, for those who are sitting in cash or thinking of switching, we would encourage you to call us to understand your circumstances before you make such a move, and then we can help you and advise you what's in your best interest. So 2020 was an incredibly unusual year, and in this quarterly I'll talk about it's like a 1 in 100 year event in terms of the economy and in terms of the markets. The economies unfortunately are still recovering. We are still feeling the aftershocks of what's happening around the world with the virus, yet the markets seem to be pricing ahead of the game and have recovered strongly. What we know about when you invest is in the short term, these shocks and conditions happen from time to time, but having a long-term strategy to guide you through and to be well diversified is a key part of building a retirement portfolio. So there's been always trade wars that's going on. Unfortunately, at the margin, there's been a lot more noise between Australia and China in terms of trade wars, also some trade wars between China and the US. But Australia is a resilient economy and will figure out how to navigate through this. Also, there's been a recent dampening down of the trade war rhetoric between both countries. In terms of our investment strategy, we've always thought medium and long term, and we haven't made any changes. And if anything, we still see a growing Asia, and a growing Asia economy will still need resources, will still need exports out of Australia. We think Australia will ride through that quite well. So there's been a change in US presidency. So we've now seen President Biden win the US presidential election. We've also seen the Democrats control both houses. And that means there will be some certainty in how they enact their economic programs, and the markets are reacting to that. What markets do not like is uncertainty. There is a sense of certainty with a president and in control of both houses. I think it's too early to tell what that means for markets, but what we do know for the economy is there is more stimulus and there's more focus on beating the coronavirus, and we expect that should be a good outcome for the US economy and hopefully the world.